Hello everyone, this is Crypto Dealers Live. My name is Jan, and today we're going to talk about BTC again. Celebrating the 15 years anniversary for Bitcoin's white paper yesterday, today we have a topic to discuss regarding Bitcoin and Bitcoin only. Today's name of our live stream is The Conditions of the Next Bitcoin Cycle, and today we're going to be looking at an article by Jesse Myers, published in June 2023. And let's dive right into it. The article, by the way, is called Next Cycle Could Be Bigger. In here, Jesse talks about the reasons why he thinks that the next cycle could be bigger than the previous one, which is a very bold statement. Let's see the arguments Jesse has. So here's the introduction. In the intro, he talks about the so-called iron rules for Bitcoin. And in his opinion, those are, number one, the bear market low never goes below the prior peak. And the second one is each bull market delivers less upside than the cycle before it. In my opinion, that is obvious because just basically tiny capitalization and no recognition in those years were allowing the market to grow rapidly. And also each halving that we had was cutting down a huge amount of supply for every time, basically every 4 years. Every time a halving was occurring, it was cutting down a big chunk of supply. Thus, the so-called natural market or enthusiasts who were driving the market naturally were growing gradually, but the supply was dropping so much, and thus the price was growing much faster. But let's talk about that a little bit later. In the continuation of, to continue Jesse's introduction, he says that in November 2022, we broke the rule number one, where our bottom price was lower, almost $5,000 lower than the previous peak from 2017. And that is actually true because we really bottomed at around $15,000 and we almost had 20K previously. Then Jesse says that he's starting to feel that we might break rule number two after the upcoming halving, which is a very interesting idea because these two factors, although they're about breaking the rules, but they're very controversial. So in conclusion of the introduction, he says that, in my words, I'd rephrase it as previously there were obstacles we won't face this time. And the second one is we now have potential we never had before. Let's see what Jesse means in those words. So basically, this article is unfolding the details of these two arguments and trying to tell us how we could do more X's on Bitcoin's price than we did last time. So in this timetable that you can see here in this chart, Jesse shows us that we only did a 8x in our last Bitcoin bull run, comparing to 30x and 100x in cycles of 2012 to 2013 and 2016 to 2017. So it's a pretty significant drop. And Jesse says that we should have done at least twice the price. So we should have done 15x instead of 8x. So let's dive into the history of numbers. As we already said, 8x is much, much lower than the 30x and 100x in the two cycles before. As I already mentioned in the beginning, it's a very natural thing because the previous x's like 100x and 30x were really unnatural in terms of, sorry, I meant that the rapid growth before it was a natural thing because of the technology not being recognized and a very small capitalization compared to today. We should have done 15x, but why did we get only 8x? And remember, we're still talking about Bitcoin because I already hear people saying, hey, this coin, that coin did so much bigger. In general, the market grew by this or that amount of numbers or percent or whatever. Here, we're only talking about Bitcoin. Remember that Bitcoin is our universal tool of measurement and just generally the most important and the only true cryptocurrency we have. All right, so in the chart below here, Jesse shows us that basically what I was talking about a little bit earlier, where in the first two halvings we were dropping down like crazy. We were going from 50 to 25, which is a great cut, and then we were going from 25 to 12.5, and that is a big change. And as you can see now by the red line, we are approaching this it can be called a plateau, but basically a very small delta that we have left. In percentage, it's around 7 to 8%, but in numbers, it's a very small amount. So we already have 19, close to 20 million Bitcoins out there. So yeah, just a million left. And this factor won't affect it that much. But here, Jesse also talks that this decaying amplitude of bull markets is to be expected in one sense. This is because each subsequent halving represents a smaller reduction of new supply issuance relative to the circulating supply. So basically supporting what I've just said. And here he shows that how, well, call it unnatural compared to other cycles. This halving that we went through recently was, where every other halving had a strong, recognizable peak where it was just shooting up and then coming down gradually or not so gradually. But here we just had two hills, or call it bumps, instead of a big, big peak. And here Jesse talks about the reasons. According to him, the answers to these questions are Chinese ban or China ban, the preponderance of leverage, paper Bitcoin issuance, and the so-called Fed's pivot to QT. Let's go through them one by one. So the Chinese ban, as you can remember, give me a second. Yeah, so as you can remember, in the middle of 2021, so-called the warm-up period for the previous bull run, Chinese government decided to ban BTC mining. This of course, brought fear to the market, as well as Chinese miners started to sell tons of coins to fund the relocation of their facilities. Remember that a lot of mining facilities were located in China due to many, many positive factors at that moment. So this was in the middle, again, this was in the middle of 2021, which was basically right in the center of the hype up period for the previous cycle. And that did a pretty significant hit. And then the second one is Jesse, I'm switching to the preponderance of leverage. Basically, Jesse says that we had close to non-available leverage in the market up until the previous cycle. But why was the previous bull run so bad, though, is my question. Well, Jesse says it's due to most leverage positions being long. Thus, traders were willing to sell quick to not pay those high fees daily. This is an understandable thing. Leverage drives the market. And although we already had leverage in 2021, or call it the 2020 cycle, compared to other cycles, it was still used in well, not in the wrong way, but it wasn't used the way it's used today. It was all in long positions, but they couldn't really drive the market up because the fees traders were paying for daily leverage, or sorry, daily fees they were paying for the leverage they were using were huge, and they wanted to close it as fast as possible to secure the profits they had. The next reason is paper Bitcoin issuance. So here Jesse talks about FTX, referring to them claiming to hold 80,000 BTC that they didn't really have. That is almost $1.5 billion at that moment. And the price and the amount of in dollars doesn't really matter. What matters is that the amount of Bitcoins they claimed to be holding was almost a quarter of the mined supply over that year. You can imagine the effect on an asset price of having a quarter more in circulation than there should be, or than it is planned. So these factors are all kind of piling up together. The FTX part, the Chinese ban was a significant hit, but it was a smaller hit than the last argument that we're going to discuss now. And the leverage is mostly about, as Jesse said in the beginning, it's mostly about the unavailable tailwinds that we might have now rather than the headwinds, because China ban and two of these others are exactly about that. So moving on to the fourth and final argument that Jesse puts up here, so-called Fed's pivot to QT. QT is quantitative tightening, for those who don't know. Here, Jesse talks about the main reason for BTC not going higher last cycle. So Jesse thinks that this reason, number 4, is actually why, despite all of the issues we had during that year, why we capped the price at a certain point. Jesse says market had almost recovered after Chinese ban or China ban when the Feds decided to change the QT, decided to change to QT after staying in the mode of QE, quantitative easing, for so long during COVID years and fueling the market. So as we know, and Jesse talks about it here in detail, during COVID, the government was printing money, giving out zero interest loans, and basically a tons of free money everywhere in the world, not just the US government, but generally the whole world was printing money, especially the Western world. And people had a ton of free money, and all of the markets were growing, not just crypto, but stock markets, real estate, everything. So after doing that for several years to cover up COVID, they decided, hey, it's time to shut this down. So they changed back to QT, and this is, according to Jesse, this is why we didn't double the peak last time. This is why we only capped at 60 plus, not even reaching 70, although according to Jesse over here, we should have been around 125 range, which would be approximately 15x from the initial price or the initial low. And I am interested to know, what do you guys think about this? Because the idea and the theory Jesse is unfolding here is very interesting. In the beginning, he talks about the absence of tailwinds and huge headwinds that the market was facing. Do you think these arguments really apply to what? Basically, do you think it applies to the idea that we might be growing in better X amount of times than before? And if we're looking at our previous low, which is $15,000, we might, according to Jesse, we might go up to 15x. So that is what? 200 plus $1,000? $300,000? Do you see BTC around $200 to $250,000 within 1 to 1.5 years after halving? Reminding you, halving is less than 7 months away. Less than 7 months, and then after that, as we see in this chart, it usually takes around a year and a half in today's world to accumulate and get to the price. Do you think we will see $250,000 in 2026? Is that something that looks realistic to you? I'm very eager to know that. Please let me know in the comments below, and until next time, thank you for watching, and do not forget to subscribe to Crypto Dealers English. My name is Jan Root, and till next time.